My name is Jason Sen. If you don't know me, I started trading on the London Stock Exchange floor in 1987 when I was 19 years old. About 3 years later, I moved over to the London International Financial Futures Exchange and I traded in the open outcry pits there until the end of the decade. I moved over to trading on the screens when the markets went digital. I've been doing that ever since. About 35 years that I have been involved in the financial markets. Over the last 15 years, I've been providing signals and technical analysis to banks and independent retail traders. When I started, there were books about trading, but no videos and no courses and nothing online anyway. So you were thrown in the trading pit with your own money and you had to learn really quickly. Very much by trial and error. I ended up writing loads of books for my own benefit so that I can remember all the rules. I've just decided to release them for free for my YouTube followers. In the description box below, click the link to receive the series of ebooks for free. You'll also get an opportunity to book a free mentor call with me. Book it up and we can talk about ways that I can help you improve your trading. It's all free, no charge. It'd be interesting for me just to meet people and see how you're getting on. In this video, I'm going to cover my golden rules of trading. I've made every mistake in the book over and over again. I didn't just wake up one day and be the perfect trader. I unfortunately learned trading the hard way. It really is a struggle and it does take years. You can't master a skill like this. I say master, I wouldn't say I've mastered it. You can't become a consistently profitable trader without making a lot of mistakes and learning. Same with every profession. So I've written my golden rules of trading. The first one is actually do your own research and make your own decisions. Now that's probably quite a funny first rule from someone who provides a technical analysis and signals service. Do not enter a trade without proper research. Study your technicals. If you want to learn technical analysis, talk to me. I can teach you. I've written a course. It covers all the basics and all the techniques that I've learned over 35 years of trading. You need to understand why you have entered a trade, not why someone else is recommending that you enter a trade. You must set a budget for how much to risk on each trade. Your risk must be in proportion to your reward. I recommend risking 1% to try to make 2%. You must use a stop loss and you must never move the stop loss further away from the entry point. Don't run losses by moving your stop loss further away from your entry price. Set a daily win target for the day and the same with a loss. Have a maximum loss that you're prepared to take for the day. So if you've done 3 or 4 trades, they've all gone wrong. You've hit your maximum stop for the day. Just walk away, clear your mind, get ready for the next day. That way you're protecting your downside and you're going to be in a position where you're mentally ready to trade the next day and obviously financially ready because you haven't blown a massive hole in your account. The amount you're prepared to lose in one day should be less than the amount that you're prepared to win. Do not average into a losing trade purely because your position is losing and you can't bear to take a loss and you think the market's going to reverse. It's not a winning strategy. If your strategy is to average into a trade across a price range, and I do recommend that, I do that myself, that's fine. But don't average into a losing trade just because it is losing, then you don't want to take the loss and you think eventually you'll be right. Don't lose more than a day than you intended to make. If your target is to make $200 in a day, don't go and lose $300. That's going to put you in a hole and it'll take you too long to make it back. Don't let a good profit turn into a loss. So let's say you're risking 15 pips to try and make 25 pips. If you've got up to 20 pips, you're getting close to your target. Don't allow the market to just turn around and then hit your stop. Trail your stop up, manage the position, make sure you at least come out of the trade with, say, 7-8 pips in profit. The market may actually return to your entry point, may give you a second chance after you've taken that small profit. Don't enter a trade if you're unsure of the trend. I'm a trend follower. Following a trend is one of my key points. I go into that in my course, actually. But identify the prevailing trend and trade in that direction. Don't go against the trend. Don't close trades without a good reason. I've done this. The market might be going in the right direction, but it may not have moved for 2 or 3 hours. You get bored and you exit the trade. Don't do that. Make a plan and trade that plan and wait for either your stop or your target to get. Make sure you do have a target. If you get into a trade and you don't really know where you're going to exit, you're never going to be satisfied with where you get out. Even if you do make a really nice profit, if the market continues going in the direction of the trade after you've got out, you're going to be kicking yourself. You need to have a target and you need to have a point at which you are satisfied that you have made a good amount of money and you're prepared to move on to the next trade. So you must have a target set in order to be satisfied with the result of the trade. Never cancel your stop loss and always trail it in the direction of profit. Keep the size under control and keep the number of trades under control. Don't trade spontaneously. Stick to the plan. So these are some of the ideas I have in my Golden Rules of Trading ebook. Please just click on the link in the description box below. Sign up for my series of ebooks. Book a free mentor session with me and we can have a chat about your trading and try and find ways in which I can help you to improve.